Hello, Hugo. Stephen Bertle, welcome to Face. Nice to meet you. Hello, Arena. Alexander. Amira. Sinatra. Let's take a look around. Good morning, Marco. Okay. So, EG, I thought last week was a pretty good top. But as you can tell, we're starting to head up. We're right in the 61.8 level right here. Nothing that compelling for me to try except, 61.8. That would be the contingency, that believing this was the high ABC and maybe we get another ABC to the downside. Nice looking day, held a 50-day. I don't know. Euro fading pretty good from making a lower high, but it's stronger than cable. So cable looks heavy, maybe heading down to 38.15, but is the dollar bottoming here? We're trying to put in a higher low. This doesn't look like a solid bottom, but maybe we get ABC up here. 92, I still think, is a big pivot. How you doing, Galaxy? Laura? Sa? So 92 is really, until the dollar index really starts trading back above 92, you have to give the downside the benefit of the doubt. We'll see what happens here. It actually looks pretty good putting in a higher low here. So I think you could be long the dollar for at least a rally back to here. You're wrong under this low. To me, it looks like ABC, and then here's a B wave, and we could get a C wave here. And what's interesting to me, and it did get down to my level almost. I was looking for 38% back. It did it. So yesterday, saw that there could be a third drive here. This may be one of the reasons why gold's under a little bit of pressure here. That if you're a believer that we're in a bull market in the end, the most bullish thing it could do is hold at 38% back after failing for major resistance up here. And if that's the case, and I don't believe it, that's why I'm not aggressively buying US dollar yen, that yields are going to head up for another high. I think that's a little premature. I want to talk a little bit about ForexAnalytix. Any questions for me on anything I've covered? And this is also a pretty big day in the S&Ps and the NASDAQ. Is this a failing rally? Or are we going to new highs? The daily augurs for new highs because we did confirm on the daily. So we'll see if we get a new high there. But you can't rule out that this could be a failing rally, about 78.6 back, and that we roll over again. NASDAQ, a weaker picture, right? Still a weaker picture. Is this a failing rally here in NASDAQ? So I don't know. I know there are a lot of cycle dates that were due right around here. Ben, are you in the house? You had April 21st. So maybe even though it's not the high, maybe it's a secondary high. Sometimes these cycles are not the high or the low, but when these turn dates come, they could be a higher low and they could be a lower high. So something to consider. Norm Winsky is going to be with us on Friday. And Norm usually gets a hold of me when he sees a lot of planetary activity. And he said this week is loaded through the end of the week. Not that it gives him anything directional, but a lot of things happening in the heavens. And I'm not there yet. Hello, Khalid. You could just go ahead and ask me your question in chat. And crude oil continues to look very vulnerable. Okay, this was one of my better calls of the week. We are back under 62. I think you have to sell rallies back towards 62 if we get it. I think we're going to challenge these lows in crude, maybe head towards 55. They had, couple of pretty ugly days. 1, 2, it's trying to hold here, but still looking vulnerable on the daily. And the BLC ruined the Canadian dollar yesterday. Look at that. I think it was mainly done in, okay, a little over an hour, it ruined the chart. So I don't know what to do with it, but I'll tell you something. Here's a lesson. I covered my Canada longs the day before yesterday, and I didn't get the top of the move, but you have to be aware of when central banks are meeting and get out of the way, because it sure looked good here, right? So I was flat, and I'm going, well, I'm going to miss another wave up, and then here came the BOC. Pretty ugly action. Tough to repair, for the chart to be able to repair itself for while it's trying, but it's like it was in a car wreck, and after something like this, after a car wreck, what happens? You're in shock, and they try and stabilize you, and sometimes you have another wave down after they stabilize you. This may have been the first wave, so it's turned into an IDK for me. Everyone know what IDK is, so I'm not doing anything there. And just one caution for gold bulls besides the yen is that this rally, this might be drive 2. Look how we're diverging on multiple time frames in the gold. Been diverging since this high. Maybe this is 1, 2. We pull back again, another high. But if the yen's turning, I think it's going to be a headwind for gold. Same thing on the 4-hour. And, maybe. But looking pretty heavy. Also, you want to favor gold shorts over silver shorts, because that 68 breakout did not hold up here. 68.60. It's trying to come back a little bit, but you look at this, and this too looks vulnerable for possibly even another low. So the silver stackers will like that. Silver also, above what would be a neckline, right? See this? See this neckline? Good morning, Monica. Whoops. Just trying to get the chat out of the way. So you kind of have a neckline, head and shoulders formation, or you could even take it down here, right here. Could have been a neckline. I wouldn't fade the silver, and I'm not fading gold either. So I'm not doing much today. Okay, you can't have great setups like you had last week every week. So, I have to restrain myself. Mrs. Pinkert, take my mouse. Please put it in the wall safe. I got to trade. I got to find something to do. No, I don't. And neither do you. So when you don't see anything and you're scanning around and you're doing this, the week's almost over. I have to make my week. Maybe the Swiss, no gold. Oh, the S&Ps, maybe I'll try that. Oh, I don't know. Yen might be bottoming. I got to find something. If you hear yourself saying, I have to find a trade, right? That means there are most likely aren't many trades if you have to hunt for them, because the good ones hit you in the face. You recognize them. And anything else is kind of like, well, I'll give it a shot. Okay. And you didn't plan it. So plan things and don't impulse trade. That was one of my demons, impulse trading. Because, you think you see everything all the time, but you have to have, like I was showing Euro pound at 61.8. Is that enough for me to take a shot just because it retraced 61.8? It could go 78.6.
Plan
it
your
could
trade.
Go to new highs.
Plan.
Yeah. And every time I don't, I learn the same lesson.
Yeah, I would if I had to go back, Dale, and look at every trade I've done in my entire 25 years of trading, I would venture to guess that if I saw all the trade, and obviously this is impossible for me to do, but I would venture to guess,
Yeah.
based on my experience, the win loss ratio is much lower on the trades that I did not plan. I would venture to
Oh
guess it's
yeah.
probably less than 50%.
Yeah.
If
I
I had
mean,
to
it's
guess.
hard
And
not to do them, but
it
sometimes.
is. I'll be the first one to admit that when things pop up, for you to not be able to take action is very, very well. You have to be very disciplined to do that,
Yeah.
and it is very difficult to do. And I'll tell you, I am one of those people that if if I see certain things lining up, I may not have been thinking about that trade, but I will take it because of my experience level, and that doesn't always serve me well,
Yeah.
right?
Yeah, I've really noticed it the last few years that, most of the ideas that I have over the weekend are my best ideas for the week,
Well,
rather than.
okay, so that also, also is market related, and I'll take over here
Oh,
too, Dale. I was going to say that's also market related too. This market is that much more brutal. It's that much more brutal on those of you and those of us. I'm not going to say those of you. I'm going to throw myself into this bucket as well. Those of you that do not plan your trades, if you're just what's the term I'm looking for? Wild westing a trade, just Wild
yeah,
West, and just shooting from the hip
yeah.
is what the old gunslinger saying is.
And
If
you
you're
even say that, I'll give it a shot.
yeah, you're just going to give it a shot.
Yeah,
That doesn't work as well in this market environment. When you have a lot of one-way markets, very trendy markets, it is very difficult to do that, and you will pay the piper. I have
yeah,
my last year has been very, very flat. If you go back to my other years, I mean, it was so frustrating that I decided not to trade, big money anymore, because it's like, why, why have the headaches, so and a lot of that is spawned from, you have a lot of experience, like I said, over 20 years of experience, and I'm sitting there shooting from the hip a lot, because my experience says, hey, when I see this and this, you got to take the trade. And so when you try it and you're like, damn, another flat, damn, I took a small loss, damn, it's barely moving. When that happens quite a bit over time, it's brutal, right?
yeah.
So
Grinds you out.
yeah, it does. And
People
so
don't
well,
understand. A lot of people would love to be even and have a break even year. A lot of them, oh, I just got to get even. That's a gambler's mantra. But people don't realize all the energy and all the time that went by and all the expenses that you had, that you weren't able to cover through your trading, where you have to dip into your cash reserve. Every trader should have, when they're in a position to do it, have savings for drawdown periods. So when, the market's not going to pay your mortgage this
oh
month,
god, you got to have that. No, so I
or
would,
another stream of income or
I
something.
was so just so you guys know, if you don't know, I left trading the firm I was trading for about 2 months ago. So I was talking to a friend yesterday, and he's like, how you coping with it? I'm like, man, it's great. Other than last night. Last night, I don't know why I had things running through my mind, so it just took me forever to fall asleep. That was one of those rare
Yeah,
nights. Those
yeah,
nights where you just kind
yeah,
of toss and turn, and
yeah,
3 hours later you finally get to sleep. That was like my night last night. But I was talking to a friend last night, and he's like, so how are you? How's it feel? Not trading as big a size. I'm like, man, it feels great. And I explained to him, I'm like, you know, it doesn't matter if you're making money or you're losing money, in my time zone, it's still a you got to get up and grind it out at 3 o'clock in the morning or 4 o'clock in the morning. It doesn't, that doesn't change. So I'm like, I felt the exact same way, in my, the last few years when I was just, rocking with higher volatility, and I still felt the same burnout rate than I do, when I spun my wheels basically this last year. And I said, I'm getting to that age where I just don't need it in my life. I really don't. I'm much more content trading my own money, taking all the profits, and sitting in a position that I can say, well, if I'm wrong, I lose a couple grand. If I'm right, I make a few thousand. And and for me, it's taking those size positions and being able to ride out a trend or what I think might be a reversal, where instead of watching every tick. It's a big deal. It makes a big difference based on what I do. So
it's a lot of heat what you were doing, Blake.
Yeah, and one of the other things, and I'm gonna be making some video series. What you guys will see is the ForexAnalytix team and myself. I'll be explaining a lot of these concepts in detail, but there is a big difference when you trade for a bank. I'm gonna just say this, and then I'm gonna move on to some analysis here. And Stelios will probably join in on this conversation. There is a big difference in when you're trading money. Like when I say money, you're trading real money, like real dollars, like big money. When you're trading big money and it's a bank's money, or it's from the bank, and you're like, well, I don't know any of these guys. It's the bank. It's like, who gives a crap? Or I was trading a few
clients,
a few gentlemen, their money, and I know them, and I'm personally friends with them, and I vacation with them, and been met with their wives.
There's a face on the account,
and I know their families, and it's and when you trade their money versus a bank's money, it's a world of difference, like a world of difference, because
you care too much.
Yeah.
Oh, it's only your job that's in line when you trade for a bank. Nothing else.
Yeah, it's your job.
No big deal.
Trading for a bank, but if you're trading for people,
it could be the relationship.
Well, it's that, and you feel
it could be.
But you feel bad too. It's like they're everything about them, and it's like, man, that's hard. It's hard, game. And so, I'd get up in the morning and I'd be like, man, did I lose, 20 grand overnight? And if I did, it's like, how awful, I feel awful, and it's great. You make money, you expect to make money, but if you lose money, it's like, oh,
know thyself, Blake.
Yeah. So anyway,
now
I'm going to go into a lot of these topics over the course. There's some objectives that our ForexAnalytix team are looking to meet over these next few months, and you're going to hear me talking about a lot of these topics and the ins and outs of them, and it's the things that people don't tell you, and that is, I think, what's going to help you grow. And you guys can make the decision for yourselves. Like, is that right for you? Was it right for you? Is it right for, it may or may not have been right for Blake or for anybody from their team, but at least you'll have the knowledge, and you'll feel hopefully the way we feel, like as far as like how it made us feel, and you can make your own decisions from there. So hopefully you enjoy all that. And I guess, and Stellas, do you want to mention anything else about that before we talk a little bit about the euro and the ECB here?
No, I think you're absolutely right, talking about trading for yourself versus trading for the bank. When I started trading for my family's money, so my father's and other family members, I was a lot more nervous than I was for the bank. The question is, what are your circumstances? For me, it was my job when I was at the bank, but I didn't. Obviously, I needed the job, but it wasn't the only thing I had. So I had the ability to trade a bit with a bit less stress, and that usually is a good thing because you make the right decisions. But other people, they if this is the only thing you have, then obviously you don't want to lose your job, because it follows you afterwards, right? Oh, you're the guy who blew up at RBS or
Yeah,
or
right.
whoever. So, but yeah, it's very different. It's very
And what's also different is 15 years, I think, too, in age. I mean,
yeah,
when you're 35 when you're 35 or 30 years old, you're like, if I blew up at RBS, it's like, well, I was young, dumb, and whatever. I took the risk. And as you get a little bit older and you mature and you're closer to 50 or north of 50, you start thinking,
yeah.
I don't know if I really have the.
Also, there was huge incentive back then. In the 2000s when I was there,
Oh
bonuses
yeah,
Yeah.
were many multiples of your annual salary. Nowadays, that's gone. So you had
yeah.
incentive to take risk.
Good point. Hey, let's talk a little bit about the ECB. We have the press conference starting here in the next 10 minutes. I know Dale's got his. We'll be in the chat rooms. Dale's going to have his interview, but ECB didn't do anything. Nobody was expecting them to either. The risk, or what we saw yesterday, and I'll talk a little bit about the Bank of Canada. So the Bank of Canada, they actually tapered. Now let's also understand that they were expected to taper. So the market expected the Bank of Canada to taper their bond purchases slightly, which they did. They just went in line with expectations. But the reason why the dollar Canadian actually rallied above this resistance to 126.53 actually is the high, is because there was a false news story out there that broke that said, and it was on Bloomberg and everything, that said that they had already they didn't taper. And so the problem with what we saw and the move that we saw is the market went on that false news story that came out via Bloomberg, by the way, probably aggressively started buying dollar Canadian above 126.30.
Yeah.
Anybody who was short aggressively turned around and bought above 126.30. And
then
it
looked like a breakout. Yeah.
Yeah. Then and fortunately, I look for a sustained break above 126.50. So I didn't fall for it. Because I knew this is the breakout point. We've been talking about it. But anyway, the fact of the matter is, the reason why I got slammed back down again is because they did taper. And so people thought two things. Oh, shoot, that news story was wrong. I need to, get back into my Canadian longs or dollar Canadian shorts or whatever it was. But also, if you think about it, they're one of the only central banks that are tapering bond purchases right now. So, for it to get slammed right back down to support made a lot of sense. If that news story never broke, I think what would have happened in the dollar Canadian is we would have been trading around 125.25. We would have slid a little bit because they did taper, and then we would have just found some support. So the reason why we had such an outsized move is because of that situation. Now let's talk about the ECB really quick. The ECB, the euro, they just kept rates unchanged. This is a very uneventful ECB meeting. What we will have to listen for from Lagarde is she going to be a little bit more hawkish, because everybody is expecting that in June both the FOMC and the ECB are going to start, quote unquote, talking the taper talk and start moving the possible goalposts for rate increases and expectations. So because of that, we have to look for hints today from Christine Lagarde, and I'm not sure we're going to get them, but I will tell you what I'm looking for technically is I'm looking for these two levels right here, 120 and 121. The reason why is because 121 is the 618 retracement, also trend line. So if she sounds a little bit more hawkish and we, get the euro back up towards the 121 level, it's probably a good short up there in the current environment, because stocks had a nice bounce yesterday. If they roll back over, dollar's going to gain some strength. And, I do think the market's trying to carve out, a top around these levels. When you look at the S&P, we're at the 161% extension, post-COVID move, the megaphone, top, so I think that we're trying to, eventually roll over and risk here back towards the 4,000 level, maybe over the course of the next week or two. And if that's the case, the dollar should gain some strength. Well, that means that if the euro does rally towards 121, then I'm going to be looking for shorts up there. Flip side is if we get back down towards 120 and it's channel support, you got to see if we can get a bounce from that level as well. If she's a little bit more dovish, obviously, if we start breaking below 120, things get a little, little bit more, volatile to the downside. Now, guys, and I'm going to take Stelios's comments here, but I just want to mention this to you. In about 45 minutes from now, if you are a ForexAnalytix subscriber, we start broadcasting the morning edge. If you like that analysis that I just gave you on the euro dollar, imagine us doing it on all of these currency pairs and all these instruments, situational, understanding why we're going to be buying or selling, or why I'm thinking buying or selling based on certain levels and circumstances. That's what we do in about 45 minutes. So you have to be a ForexAnalytix subscriber. You can get ForexAnalytix for free for a few months. Open a Pepperstone account. You can also be a light subscriber, which is $19 a month. Whoops, I went to the wrong place. A light subscriber at $19 a month and still get all the webinars. $120 a month gets you in the chat room, and that's where we're at. And remember, you can try it for 10 days. $1. That's it. All right.
Speaking of which, we're going to have. Speaking of which, we're going to have Gregor with us today in the Morning Edge.
Oh, is he coming? Oh, he's going to be on the.
Yeah.
Gregor Horvat. Oh, good.
Yeah.
Welcome back, Steve. Hey, I was just going to ask Stelios, and I'd ask your opinion as well. I know you just got back, so maybe not so much you, because you're probably just sitting back down. But Stelios, so any other thoughts on Lagarde as she takes the microphone here in the next 10, 15 minutes?
Well, I think it's difficult for her to spring any surprises. The question is, the market is not expecting anything. Obviously, they're not tapering, they're not tightening, they're not doing anything. But the risk will always be that she says something which is on to the hawkish side. I don't see any reason why she should do the opposite. So,
right. Maybe she's following the lead of the Bank of Canada. Maybe
yes, it's a precedent. It's a precedent.
I would think after yesterday's actions from the Bank of Canada, people are now starting to lean that she's going to be more hawkish. I would assume that's the expectations on dealing desks across the world right now.
Yeah, across the central banks as well, right? The Fed as well, slowly. You have vaccines getting rolled out. You have economic data. Yes, they don't matter yet, but they will eventually. And they're coming out a little bit better than expected. Now, is this a real recovery or not? That remains to be seen. But I think the central bankers let me put it another way. I was going to say desperately want to tighten. They don't. But at some point, they're going to have to at least show that they're trying to tighten. So, and that's what we will be waiting for. So I think eventually we will get a change of language. Now, do they follow through and tighten properly, with a taper and maybe hike? Oh, the H word. Haven't said that in a long time. But, it could happen. And I think you're right. I think the Bank of Canada is made the first precedent. And, you could see a swing from other central banks doing the same. It's not going to be today, I don't think, or, in the very, very short future, in the coming days or weeks. But I think it will come at some point.
Yeah, Mark Chandler predicted that Canada and Norway were the top two contenders for beginning to taper.
There you go.
Yeah,
Mark is very, very clever.
And he did that a couple of months ago here on the Face webinar.
Yeah.
Hey, Michael asked, was it a news story or banks attacking stocks? It was actually probably a little bit of both, but it was definitely a news story from some random news source. And again, it was on Bloomberg. It was like MT News or some, a lot of these little news outfits, they try to,
get the
system
scoop
by putting out some like they have a pre-release that they might like say, oops, I let it go early because they are assuming it's going to happen and they're trying to make a name for themselves. And
Jimmy Olsen.
They definitely made a name for themselves.
Yeah,
Jimmy Olsen.
Like if I ever see a news story from them again, I will not pay attention to it. And that I think it's MTI News, or there's another news source that's very similar to them, that's did a similar thing. And is it Market International News? Market News and MNI. It's Market News International. They tried to pull that crap a few years ago, and now people really, banks really just dismiss MNI now.
Yeah, if I don't hear it out of Ted Baxter's mouth, I don't take it for meaning anything.
Right.
I modeled my career after Ted Baxter as an anchor man.
Just Andre just let us know that the weekly unemployment claim, or wait, hold on, is that what you said? Unemployment claims?
No one knows Ted.
Jobless claims. They came in better. Yeah,
they did. They came in better than expected. So that's good. Again, these are, when you see economic data continuing to improve, stocks are at all-time highs, and to see central banks be as dovish as they are, you have to scratch your head and just think, man, all I can think is Powell is a very wealthy man, and he's got a lot of wealthy friends that he's doing them a lot of wealthy man friend favors.
In my opinion, you're forgetting to take one thing into account. The US just sent out checks worth 2 trillion, and they aspire to also within the year pass a plan worth another 3 trillion. Who's going to buy all that if the central bank starts getting hawkish?
Yeah, right. Yeah, good point. All right, well, guys, I think we need to turn over to Dale. Dale, is your
Chris is here.
All right,
he's the grizzly bear from Texas.
Hey, DFW area in the house. Oh, I was there for.
He's in San Antonio, I believe. Could meet Paulie.
San Antonio. Oh, that's where Paulie's from.
Yeah,
our very own Paul Franco. So, on the ForexAnalytix team. Anyway, we'll let you take over. Hey, Steve, Stelios, thank you guys. Dale, always thank you. And for those of you that are always with us every single day on these FACE webinars, thank you for your continued support. We all really appreciate each and every one of you. If you're watching via YouTube, give us a thumbs up. Thanks. All right, Dale, have a great
give us a like. Do you like us today? They like us. They really like us.
They really like
Sally Field. All right. Anyway, Chris, welcome back. Welcome back to FACE. How are you, partner? It's been a while. Our 3-4 month period in the rotation. How are you?
Hey, I'm doing great. How about yourself? Can you hear me?
Good. Yeah, got you now, Chris.
Awesome.
All right. So, God, a lot of time has passed. You just take it away and tell us what's on your radar. I know you and your associates, are active in crypto, but I would rather kind of stick to some of the legacy markets that people are ignoring. Okay, there's a Dixie, great start, because it really wasn't much of a rally, and we've given up a lot, but you think we're coming into a wave 2 low here. Is that correct?
Yeah, I mean, when it comes to the dollar, ultimately what we're looking to get above is this point up here, this 94.741. That gives us our wave 4 of that larger degree there on that decline from the March 2020 low or high, when the markets had that old that whole drop that went on there and everybody kind of ran to the dollar. And so, really until we get above that point, I mean, price is still kind of vulnerable to making a new lower low, but I think it's really making a good case right now that we've got this leading diagonal kind of going on here. And then we're pulling back here, trying to find this bottom for this wave 2. If that's correct, then wave 3 is going to take us well above that. And I think, at that point, everybody starts really kind of recognizing that, that the dollar's probably bottomed there. And, what kind of effects does that have on the rest of the markets?
Yeah, well, we know what kind of effect it'll have on the rest of the markets, right? It'll be a pretty deflationary, take a lot of the air out of the bubbles that we have going on here, Chris. So do you favor any what would be your preferred short in the currency complex? Because Euro pound has been, kind of bottomed a few weeks ago. We had a little pullback this week, but would cable or euro, or would it be some of the commodity currencies that would be your preferred short, or you just don't want to have to differentiate and you just go with the dollar?
Man, I'll tell you what. I think, especially if we get this this reversal coming in here and this move back up, I think really, any of these major currencies here that kind of make up this DXY, I think really just kind of are the way to go. So you short the euro, short the cable, long the dollar. So I guess you short the yen.
Aussie.
Yeah, so short the Aussie, exactly. They'll all just kind of, I think they're all just going to kind of fit in there. If we take a look at each of those charts, they all kind of mimic more or less what's going on here. Because if we look at the euro, let me see here.
Yeah, it's like the inverse.
Yeah, exactly. And so if we sit there and look at this, let me kind of pull out here a minute. You've got, again, you've got this same kind of idea coming down here. And moving up and breaking back down. But, again, it's nothing really different there. If we look here at the cable, let me see here.
Yeah, it's up on top.
Yeah, here we go. So
Yeah,
the cable,
cables.
of course, coming breaking down here.
Right.
And it looks like, it's got its kind of thing done here. But again, you've got this whole kind of leading diagonal coming down here through the bottom. And we were we were fortunate. We caught this actually way up in this wick up here on this reversal here for the, I guess if we pop out here to the daily, see a little bit better.
But that was too long ago. You're only good as your last trade. What have you done for me lately?
Exactly.
Yeah, I know I made $1 million off your work a few years ago, but you've been pretty cold the last week or so. Send me my money back.
Right. Again, I look at the markets a bit differently than a lot of other people do. Generally people tend to look for reasons in terms of news events and whatnot that are going on to kind of, run their narrative of why price is moving like it is. And, I come from that other side where we kind of look at the market as being this reflection of the socioeconomic events that are going on. How do people feel? Because that tends to show itself up in the markets. If people are, euphoric and excitable and whatnot, the market itself pushes its way up there.
Yeah, I pay attention to hemlines.
I'm sorry?
I pay attention to hemlines.
Yeah,
even before I started trading, I used to pay attention to hemlines.
Yeah,
you know what I mean? What a great indicator. I'm a little bit of a silly mood, but anyway, go ahead, bro.
Yeah. So, we kind of, we often find ourselves, because we look at things in that way. And then, when you're using Elliott wave, the idea is that it, that the market does move in understandable patterns because human beings act in, specific ways. And so when you're looking at the charts here, it's just this, just this aggregate representation, between fear and greed and the way it all moves. And so, by doing that, it kind of enables us to kind of look a little bit further. And instead of having to try and find those narratives based on whatever the news is today or tomorrow, we can kind of say, okay, well, it's going to do this. And then it follows through. And then, when it does.
Yeah.
But
so Chris, from that high that we had in the dollar, 93.50, 40, whatever it was, to during this decline, and I've been watching the correlation for a while. Stock indexes benefited from the dollar declining, really melted up, going in it gave us the last leg up that we've had in stock indexes. NASDAQ has been way underperforming, Russell way underperforming NASDAQ, S&Ps we had a little crack, about 70 handles from last week's high, and we rallied back. What do you think? A failing rally in here, or do you have some numbers in S&Ps that will produce a new high?
Yeah. Actually, I think we've probably got something coming in here. Let me pull up the chart here real quick. Let's see. I got to find it here real quick. Sorry about that.
It's okay.
Thought
We
I
have
had it
time.
set up here. All right, let's pull this up. So, again, we've been talking since last year about this potential top coming in. And, and so it hasn't yet. And, prices kind of continued to just kind of edge its way up overall. And so, you just kind of go back in there and you just, you get these internal subdivisions, and it just keeps kind of pushing price up there. Right now, I think it's making a good case to make this move on up here toward potentially that 49.29 area.
42?
I'm sorry?
42.
42.29. Yes. Sorry
Okay.
about that.
Okay.
Based on what we've got already coming out of here, out of the bottom, we've got like a 1-2, 1-2, and then this coming up here. So, I do think we're probably going to get that higher high off there.
Okay.
But
it kind of looks that way.
Yeah. If we zoom out to the daily, RSI is kind of pushing up in there to overbought. Stoke RSI.
Well, the last high confirmed. That's why I thought we'd get another high. Maybe the RSI does not confirm this time. And if you look at the NASDAQ, Chris, the RSI structure is so much weaker.
Yeah.
Than the S&Ps.
Yeah, and I think that's a product of what we've got going on here. The NASDAQ being much more tech heavy. Tech for the long time there for the last year here has kind of led everything. And so I'm giving it some room here as a possibility. I mean, it is possible to count 5 up through what we've already have here is the swing high, that all-time high there. But I'm kind of, because of the other ones, I'm kind of giving it some room here as a potential move up. But it's still got to take out that all-time high there. But with tech,
so you have targets all the way up there at 14,000. What is that? 300.
Huh? Yeah, 14,608, potentially 14,794. That's idealized, kind of a perfect movement up if we're to get it off this.
Yeah.
But again, there is a count you can get out of that does have that 5 up to this all-time high from a few days ago. And that could hold. And if that did, if we get that little bit further up there with the S&P and with the Dow Jones and whatnot, and then we've got tech not NASDAQ here not confirming that, that's often an indication that you've got a reversal coming in.
Yeah.
Because your indexes just aren't kind of pushing up there all together. So
I think that your counts that you have on the S&Ps might argue that we're not going to get the turn in the dollar here, and we're going to press to some of the lower levels for risk on to be there, unless you think the dollar's going to rally and the market's going to like it. That happens sometimes, but it isn't what has been happening as of late. But it could.
Yeah, things are just kind of everything, is at that extreme. Everybody thinks everything's going to continue to go up. That there's no end in sight. You see this not just with the people that you talk to, here trading and whatnot, but you also see it with your major news outlets. There's no reason to worry. Everything's fine. It's a great time to buy. Stocks are looking at amazing. But then you see things like Archegos, that just happened here. Before that, Melvin
in
Capital,
an up market, in a prolific bull market, that happened.
Yeah.
Can you imagine? Can you imagine when the tide goes out?
Exactly. And that's the whole thing. It's going to hit. I believe. I still believe it's going to hit. And when it does, I think it's really just going to kind of blow people's minds. They're not expecting it. Everything is about this whole going higher. I saw this article the other day, and the headline basically was talking about how the article itself was talking about how businesses can't seem to get to hire people here in the U.S. And so
they
what's
can't
going
find
on with
people.
that?
You mean?
I'm sorry.
They can't find people to hire.
Well, that's what they're saying. Yeah, nobody's, they need these positions filled and nobody's filling them. And, and you start looking at, okay, well, what's going on with that? You kind of think people would want to work, right? But, with the government and the way that it's, working with the unemployment benefits and all these other things. And, some people have family stuff, their kids maybe are affected by wherever they're living and whatever the COVID response has been over there. But it is kind of telling that when you've got everybody talking about how great the economy's doing and how well it's moving there, and yet you've still got governments pumping all this cash, or in one way or another, it ends up in the markets basically. It's not really kind of hitting that whole moving throughout the economy the way people want it to, so they can say hyperinflation. But
yeah, I'm getting a
Yeah.
question from Saze. He wants to know, what market cycle are we in, Chris? Late contraction or early expansion or something else?
Oh, I think we're pretty much, at the end here.
Of expansion.
Yeah, exactly. I mean, I think, and I think, this is what I'm looking at here. This is, the Dow here, coming off, again, basically the Great Depression down here. And so with this, we've got this, the Dow continues to push a little bit higher here, and you can see this is the 3-month here, the quarterly.
Yeah.
And you can see here how the RSI continues to print this bearish divergence that pushes on through there.
Yeah.
But the big story, the one thing I've been talking about is that we're in the very late stages of this wave 5 here of this grand super cycle. And so this basically becomes an 89-year cycle here from the lows off the Great Depression. And it's all part of the grand super cycle itself, which is basically about 233 years, coming off back around the time that the U.S. here, the Constitution was signed and whatnot. And, this 89 and this 233, these are these fib numbers, these Fibonacci numbers, which again, coming from Elliott wave, they do tend to give us that significance in there.
Okay. And are we in the 89th year here?
Yeah. So we're in the 89th year coming off of 1932 here. Yeah.
Okay.
So,
Interesting.
it argues for a top, in the equities market here, probably this year.
Another guy I've interviewed, and I think you're a little familiar with Gann, aren't you, Chris? He said that, what?
Who was that?
I think Nick Santiago, and he does some Gann stuff. And he said that odd number years, Gann didn't think were bullish years for the market. So, we're in 2021. So he thinks it could end up being a bad year, negative year.
Yeah.
Is that true? I'm just verifying it. 2021.
Yeah, exactly. And
Gann didn't like the odd numbers.
Well, I mean, just in this case, it just happens to be, it is an odd number. Yeah. It does come up with that fib number. So, yeah, it all kind of aligns with that. If you're looking at that sort of thing.
Okay.
But, again, you can see all these changes that are coming. I mean, if you just look at what's been going on, again, I talk about what's going on with the markets and whatnot, or this representation of this social mood. And, it's not just here in the U.S., but you can look at it everywhere throughout the world, but especially here in the U.S. I mean, last year, we had all those riots, you and I talked about it a few times, those riots and things that were happening. And, they said demonstrations, but people were, tearing into businesses and all that. There's been this huge thing,
we were a verdict away from that repeating in Rodney King's style this week.
Yeah. But just on a much larger scale, such you just feel all this pent up aggression and frustration, coming out through everybody. And this is happening at the same time here that the markets just kind of soar up to these ridiculous heights. Zombie companies are just huge right now. Everybody's putting money in these companies because, hey, they feel like the Fed's going to, be able to bail them all out. So it doesn't matter. And
I don't think there's ever been as many bubbles happening at the same simultaneously. 2000 was .com, right, Chris? But now it's commodities have been going up, real estate's been going up, the market's been going up, crypto's on a tear. Find an asset class besides bonds that aren't a bubble.
Yeah, exactly. And that, I think when you step back as somebody who's in the market, I mean, I think you have to recognize that.
Yeah, what's an NFT? I know NFP. NFT, people paying millions of dollars for digital art. I mean, maybe I'll do something on my Etch-a-Sketch and try and sell it. But, with this going on, Chris, recently gold got back through 1760, which kind of looked like a pivot, and we've moved up. Wondering where your head's at on the metals here as well. Silver holding up better.
Yeah, honestly, I don't think it's any different. There's no reason for me to change anything that I haven't already been thinking. I'm still thinking that we're going down there. I still think we're, dropping down to around 900 on that. I think right now we're just kind of finishing up the end of this this kind of rally coming off of gold and silver and whatnot. And I believe we should have that reversal. And, if the dollar's doing what we're looking at it, where it's going to kind of come into this bottoming area here where we were talking about, I mean, there you go. There's your reason, right? The dollar kind of pops up and your gold and your silver take that hit, and and then everybody yells about how great Bitcoin is and how it's going to be the savior of the world.
Yeah. So you don't think that crypto is going to be immune to what you're talking about?
I've been working so hard to try and figure out how that could happen. If you've got a deflationary dollar, what you're, as that continues to deflate, the value of the dollar goes up. And if the value of the dollar, what you're paying for a thing becomes worth more, then it takes less of them to buy it, right? So that necessarily gives you that downward price pressure on things that are denominated in dollars. And so it seems to me that the only way Bitcoin would even be able to even hold its ground, much less continue to advance with an advancing dollar, is basically if there's just that much more demand going into it. But I mean, let's face it, Bitcoin is volatile. It's one of the most volatile asset out there, right?
It is.
And people don't tend to keep money in that stuff.
Dog coin, do you think, which was, I mean, isn't that symptomatic? It was created as a joke.
Mm-hmm. Yeah.
And people are pouring tons of money into doggy coin.
Oh man. Yeah, man. Dogecoin. It's just crazy. You've got everybody here, the 420 there was, run there as Doge Day. And one of the worst places I think that anybody can go and get their financial advice is from TikTok. And yet that's exactly what people are doing. I actually created an account just to look at how bad it really was there. And it's just awful. We had one of them that was making the rounds was talking about Dogecoin hitting $100 or not even $100, $1,000.
Yeah.
And then all this Elon Musk is behind it and he's going to put this money in it to make everybody do it. And man, I mean, talk about classic signs of a top of the euphoria just reaching ridiculous levels.
Right.
And of course it didn't.
All right. One thing that might be cooperating right now, even though the S&Ps aren't, it looks like crude WTI put in a lower high this week after the first $10 break off the high, and looks like it could be entering a 3 or a C. Wondering what you're thinking about WTI in here, Chris.
Let's see here. I've got that.
Because that's, I mean, WTI has led bear moves before in the market, right? So
right.
Perhaps that's happening again as it topped earlier. It's a lower high there, see?
Yeah, exactly. And so
we cleaned out the stops over 62, and now we're back, back there. What do you think?
Yeah, I'm leaning, I continue to lean toward the downside here. I've got another count that says, okay, maybe we've still got one more wave up. So that's this red count here. And that would suggest maybe that this is a 3 and this is a 4 and we got a 5 still. But, my primary right now is kind of seeing this is the top up here, this being this 5 of 3 or whatever. And so that gives us, this gives us, should give us this further pull back and could even be further along than that. Locally, like you said here, you had this move up and then you had this big drop off and it just continued to kind of move on down here. That looks like we'll basically get this bounce, which is, this is the 1 hour chart here, and we're almost topped out in Stochh RSI, and we're below the 1 hour pivot. So, generally we're going to look for this to kind of get down here, at least target that S1, if not the S2. And if you hit the S2, then you're looking at, continued downside here.
Right.
So, yeah, I mean, when I'm looking at that, that's exactly what I'm seeing. Is this oil is having, more trouble than what it has.
Yeah. So here you're talking about, industrial commodity, copper also, Chris, I thought we'd get one more high out of it, and it looks like we're going to try it. I'd be interested if you have one. Maybe we could wrap it with it if you have a copper count you want to share with us.
I don't think I do. I don't think I have it at the moment here.
Okay.
Yeah.
Okay. How about anything in grains? I mean, the grains have been like crypto. You've had beans and corn and everything going up, or any commodity market you want to show us that, a lot of people are saying that commodities are in the beginning stages of a super cycle.
Yeah, I don't have anything at the moment here, but what you're saying, again, that just kind of goes with what we were talking about earlier with everything just kind of bubbling up to the top. You had lumber, which shot
1900
highs up. You had copper jumping in that, and so when you look at the commodities and then them all doing this big, huge move up here in this last year, along with stocks, along with, just everything, it's this, basically this everything bubble. And people say, okay, well, if this is going to happen, there's just no way we can get to, get into a deflation. There's no way we're going to get into a recession or a depression. Janet Yellen won't make it happen, won't allow it to happen, as if she's got some kind of control. But I mean, this is the thing. It seems like people, even very smart people who've been following markets for a long time, you see that they're susceptible to this.
They drank the Kool-Aid.
They just can't see it.
Yeah. Well, Chris, you want to show your website so people know where to find you?
Yeah, you can join me at howtotradetowin.com. There we go. And so, you can jump on over there. We talk about all this stuff every day. We give you the charts, but mostly it's about, why is that not coming up there? Oh, there it comes. It's about the education in it. So everything we do, is based on that education. And I don't know, it's not coming up here for the moment. My browser's messing with me here. But
all right, so trade to win. How to trade to win.
Yeah.
Okay, because there's another guy I think has trade to win. How to trade to win. And you can also get a hold of Chris on Twitter at Texas TX.
At TX West Capital.
And Chris, I want to thank you again for growling your bearish viewpoint. It gives us balance here to know there are two sides to it. And there's Chris's website and your services, education, forecasting. Thank you, my trading warrior brother, for taking time out of your day to be with us today and share your counts.
Well, I appreciate you, man.
Because I know, it takes time. Everyone thinks, well, I'll be, anyway, just label something. But, I know I put a lot of energy and thought into things that I communicate to the trading community. So thank you for sharing your excellent work, and thanks for giving me an upside target in S&P that I'm going to short the hell out of.
Thank you, Dale. I appreciate it.
All right, everyone. That's Christopher Inks, and you can find him at How to Trade to Win and at Texas TX West Capital on Twitter. All right, buddy. Good hunting.
Take care, man.
All right, that's a wrap, everyone. We'll see you. We're going to wrap the week up. TGIF tomorrow. Join the guys in 15 minutes for Morning Edge, and we'll have Norm Winsky, Moon Man, with us tomorrow. Okay, so that's a wrap. Remember, don't just count your P&Ls, count your blessings, and I'll see everyone tomorrow. You're very welcome, Alexander. You're welcome, everyone. Thank you again, Chris.
Thank you.